And India is poised for a boom in initial public offerings before the year ends, in listings worth billions of US dollars. Companies seem to be shrugging off earlier concerns over trade and geopolitical uncertainty and looking more to IPOs as a better source of raising capital. Rebecca Bundhun reports from Mumbai.
18 billion US dollars. That's the total amount Indian companies are expected to raise through initial public offerings in the second half of this year, Jefferies Financial Group projects. It's closing in on the record $21 billion raised in the whole of 2024. The IPO surge signals a reversal from lukewarm activity earlier in the year. Yatin Singh of MK Global Financial Services says it's partly from easing concerns over US tariffs.
Once the market sensed that the perceived threat of tariffs to Indian economy in particular is not as extreme as it was originally feared, there was a revival in confidence and that immediately opened up the floodgates for IPOs.
The revival is being helped by strong investment flows into mutual funds, which finds its way to IPOs, and institutional investors. An estimate from Prime Database shows that IPOs worth $30 billion for 161 companies have been approved or are under review by India's market regulator. The IPO list includes the Indian unit of LG Electronics. It's targeting $1.7 billion. Lender Tata Capital is aiming for a $2 billion listing. The companies cover a broad range of sectors, from finance to clean tech, and construction to retail. This eyewear retail chain, Lenskart, is one of the Indian companies that's eyeing an IPO. The idea of public listings for firms like these is often to raise money to expand, and analysts say that a healthy IPO pipeline therefore reflects an optimistic outlook for India's economy. The World Bank projects India's GDP will grow by 6.3% in the current financial year. That would mean the country could maintain its position as the world's fastest growing major economy. Also boosting confidence, lender HDB Financial Services recently raised $1.5 billion in India's biggest IPO of the year so far. But not all market analysts are as bullish, especially when it comes to retail investors. In recent years, many middle-class Indians jumped on the equities bandwagon, seeking high returns as markets rallied. The interest has cooled, and Ajay Tyagi at UTI Asset Management says valuations and investor demand for public listings still aren't back to previous highs.
For IPOs to go back to where they were in 23 and 24, you have to see the excitement in the equity markets go back once again. I think we are some time away for that. There has been a let-off in this excitement from the retail investors, and that's why you're seeing the retail participation, while still strong, but in terms of magnitude is coming down.
There's also a lot of uncertainty still on the horizon.
The tariff situation is still, the belief is that India has got it under control, and that's why markets are stable and doing okay. But it can go the other way around as well.
Such risks could quickly dampen the IPO market's revival, as investors watch to see where a US-India trade deal could go in averting crippling US tariffs. Rebecca Bundhun, CNA, Mumbai.